I am excited to announce the publication of Kerrigan Advisors' first quarter 2026 Blue Sky Report and share some key results and highlights with you today. I'm also honored to report that our firm just yesterday successfully closed on the sale of Toyota of Noonan to AutoNation in the Atlanta, Georgia market on behalf of our client, Tamarin Automotive Group, and owners Danny Braden and Rob Gallick. This transaction is one of the top Toyota franchises to sell in 26 and is one of the first Toyota franchises AutoNation has acquired in over a decade. It reflects many of the themes we discussed in our first quarter report, starting with the accelerating pace at which the buy-sell market kicked off this year, rising 21% in the first quarter with 114 transactions completed. Buy-sells also reached a new peak on a trailing 12-month basis with 478 transactions completed through March 2026, the highest level ever recorded in a 12-month period. As auto retail enters its sixth year of record-setting transaction activity, the accelerating pace of consolidation has become an industry staple. Now, one of the drivers of the increase in franchises sold during the quarter was the resurgence of multi-dealership transactions. Through the first quarter of 26, 108 multi-dealership groups sold in the trailing 12 months, driven by a sharp increase in first quarter activity, which rose 36% year over year. The acceleration in both dealership and dealership group buy-sells is consistent with the findings from Kerrigan Advisors' third annual OEM survey, in which 35% of OEM executives expect buy-sell activity to increase in 26, while 53% project the activity will remain at today's elevated pace. That signals the likelihood of a continuation of the active and accelerating buy-sell market this year. Kerrigan Advisors also attributes the increase in 26 buy-sell activity to a growing number of dealer families determining the time is right for a sale, particularly as franchise valuations remain elevated. The Kerrigan Blue Sky Index rebounded to 176 at year-end of 25 and rose again in the first quarter to 178. That means it's 78% above 2019's levels. The driver of today's rising values is the strong demand for the top franchises, which continue to see price premiums when they come to market, and in the case of Toyota and Lexus, record valuations. These historically strong blue sky prices, particularly for the highest demand franchises, are bringing more sellers of top brands to market and resulting in a significant increase in the buy-sell market in buy-sell activity in 26 and in their buy-sell market share. You can see that BMW is up 228% in the first quarter of 26 and Porsche is up 207%. Now, evidence of the price premiums being paid for these high demand assets was very visible in the public's acquisitions in the first quarter. The public's average acquisition price per dealership in Q1 shot up to $200 million. Up 253% from 2025. This quarter's spending included Penske's record-setting approximately $670 million purchase price of just 2 Lexus franchises in Orlando, Florida. That's the most ever paid for 2 dealerships. This transaction reflects the significant price premium top consolidators are willing to pay when rare assets become available for purchase and is consistent with what we saw in the second quarter with the Toyota transaction we announced today. 2026's record-setting blue sky values are notable when viewed against the backdrop of softer first quarter earnings. Kerrigan Advisors estimates that average dealership earnings declined between 15 and 20% in the first quarter of 26, resulting in average public dealership trailing 12-month earnings to come in at about $3.9 million, down 4% on the full year relative to 2025. While the first quarter proved more challenging, industry performance was materially impacted by severe weather conditions affecting roughly 50% of the continental U.S., as well as difficult year-over-year comparisons due to tariff-related pull-forward demand in the first quarter of 25. Now, importantly, even with the first quarter decline, dealership sales and earnings remain structurally above pre-pandemic levels due to sustained new vehicle gross margins, higher F&I penetration, rising used vehicle sales, and continuous growth in that very high margin fixed operations business. In fact, average dealership revenue remained at record levels in the first quarter despite a decline in new vehicle sales during the quarter. Now, overall, acquirers remain optimistic about future earnings growth, especially as they begin to implement cost savings and revenue-generating AI solutions. AI has the potential to eliminate certain dealership operational functions, dramatically reduce personnel expenses, and transform the vehicle sales and service process, which is expected to improve future dealership profitability. Now, according to Kerrigan Advisors' 2026 OEM survey, the majority of OEM executives, 59%, expect AI to positively impact dealership profits in the future. Perhaps the clearest example of AI's potential impact on future new car sales is Carvana's successful entrance into the new car market. Following its acquisition of a Stellantis dealership in Casa Grande, Arizona, population 68,000 and about 50 miles from the center of Phoenix, Carvana increased new vehicle sales there nearly tenfold in just 12 months, employing its AI-enabled digital retailing solutions to become the leading dealer in the state and actually the whole country. Carvana's explosive sales growth demonstrates the power of a digitally enabled sales model driven by data and AI rather than the traditional labor-intensive and often inefficient legacy retail process reliant on human insight. The growing role of technology in dealership operations is creating a competitive advantage for larger groups with the capital and scale necessary to invest meaningfully in these systems and re-engineer their sales approach with an AI in mind. Kerrigan Advisors expects AI-adjusted earnings to become a key discussion point for the remainder of 2026 and into 2027 and be a driver of valuation. With that brief overview of the first quarter report, please feel free to scan the QR code to download the full report if you do not already have a copy. We are also happy to mail you a hard copy for those of you who still prefer a printed report, as I do. And thank you again for tuning in to this review of the first quarter Blue Sky Report. Please do not hesitate to reach out to me personally with any questions about our analysis of the buy-sell market, valuations, or any other industry discussion that we have. I'm always happy to serve as a resource. And in the meantime, I wish you all a robust summer selling season. Thanks so much.